name is Bret Mooney, and welcome back to Mooney Talks Money. Have you ever thought about buying or selling a stock, and then a few days later, the earnings report gets released, and it may or may not move up or down substantially due to that data? Well, today I wanted to provide a little bit of information on earnings season, kind of what could cause some of that short-term volatility in some of those stocks, and what could be the effects on the long-term outlook on those stocks. So to start, I just want to start with what is earnings season, right? And what is it used for? And what it is it's an opportunity for or a period in when all public companies are required to release their quarterly financials. They actually use a form called the 10Q to submit this on a quarterly basis, but they are required to submit this. All public companies are required to submit it on a quarterly basis. So why do companies do this, right? And typically, you might think, why would a company want to provide information on the cost of the services they provide, how much income they're making? Well, essentially, they're forced to, right? They're required to report those 10Qs on a quarterly basis to inform investors, right? And it's going to give us an opportunity to say, hey, do we want to keep our positioning in that stock? Do we want to own more of that stock, or do we maybe want to sell that stock based off the new information that we're receiving from the companies that we may want to be invested in? So I wanted to focus a little bit on what this might mean for you, right? So for your long-term diversified passive investors, the short-term fluctuation in some of these individual stocks might not have as big of an effect on your overall portfolio as say an active manager or someone who invests in individual stocks. So today I'm going to be focusing on those investors who are in those active strategies or those individual stock strategies that could have a pretty major effect as company earnings reports get released. So to start, I guess I want to start with how would I make the decision on a particular stock or an investment, right? And the first thing that I would do as a company's earnings reports gets released on if I want to buy or sell that stock, I would compare the company to itself, right? So what does that really mean, right? Well, the companies have been reporting their earnings on a quarterly basis since they became public, right? So you can reference old earnings reports data to the new reports that they release, right? So a good way to do that is by checking out the income statement that a company releases on that quarterly basis, right? So on an income statement, you can actually articulate the cost of goods sold from a company, right? So you can actually articulate whether it's more expensive or more profitable for a company to sell their product in that particular space relative to previous periods, right? So you can get a really good idea on if it becomes or if the environment's more profitable or less profitable for the particular company you're looking at. A second way you can articulate an earnings report is by taking a look at the balance sheet. In particular, I would look at the short-term cash position, right? And the reason for that is that short-term cash position might give you a really good idea on that company's ability to pay off their short-term liabilities, right? For example, if a company has a very large cash position versus a company that doesn't have a large cash position to be able to pay off those debts, if everything were the same, right, I would rather be in the company who has more short-term cash to give us the availability to finance that debt in the short term. The second way that I would take a look at a company's earnings and articulate if, hey, is this something that I want to continue to own or not? I would compare it to the peers in its space, right? You can look at those the same two statistics even in those spaces, but the reason I would want to compare it to its peers is because it could be an industry-wide issue as opposed to an individual company issue, right? So for example, we've had a lot of shortages with chips or semiconductors, right? It might not just be one company in that space that's having an issue, it's the industry as a whole, right? So in particular, if you have one company's that earnings reports were negative, right, I would compare that to other companies in that space to see what those companies are looking like. Are those companies worse off than they were at their last report, or are they better off, right? That's something that you can compare hand in hand and might give you an opportunity to say, hey, I might want to own that company instead of the one I have because they're more profitable during this environment, or they have less debt. Those are things that you can look at when making a decision. So at the end of the day, there's a lot that goes into, excuse me, there's a lot that goes into whether or not you should buy or sell a stock, right? But this should give you a little bit of a better understanding on how to articulate that earnings report that gets released quarterly, right? Now, obviously, if there's some headline news or some outbearing issues that we aren't aware of, that could negatively or positively impact the stock as well over and above its fundamentals. But I just wanted to give you guys a little bit of an inside look at how to fundamentally look at some of these companies as earnings reports get released. So that's all I had on the agenda for today. If you have any questions or want to get more detail on how to analyze stocks in particular, feel free to leave a comment or reach out to me individually. Thanks, guys.